All right, now let's welcome in Sandra Cho for a look at the market. So we're heading towards a Dow record close. We've been on a remarkable run. Sandra, 5,900 looks within reach on the S&P. What's your view?
So our view is that by year end, the S&P 500 will reach approximately 6,000. We're in the soft landing camp. We definitely feel like the Fed has done a pretty good job at, there's been a couple hiccups, but has done a pretty good job as far as, factoring in inflation and really managing what's going on, especially with the geopolitical events happening.
Where do I want to be then within this market? I feel like there's a good debate, some calling it an everything rally because so many different sectors, every sector's up on the year. Some are up more than 25 of the sectors within the S&P are up more than 20+% year to date. I've got, a really good run out of financials and industrials, and everybody knows about tech and utilities. But how does that inform me on where I want to go now?
Yes, so definitely some sectors, are pretty hefty and kind of overvalued or fair valued, but there's still some room for certain other sectors. You mentioned industrials. We're still fairly bullish on industrials and, the other cyclical sector, energy. So energy's taken a little bit of a hit, we can see, but, the valuations we still feel are pretty low. We know that AI is not going to be going away, and we know that energy is going to be feeding that AI. So we do like energy. We still like industrials. And then with fixed income, I'm actually, more concerned about fixed income as far as valuations in some ways, because the areas there look pretty lofty. There's only one area, MBS, mortgage-backed securities, that look like they have more upside. We still like munis, but we think they're fair value right now. But taxes, we feel, are going to continue to go up no matter who gets elected in November. So.
What about tech? A couple weeks away from big earnings from that big group. How do you see that now?
Yes, tech right now, depending on what you're looking at, if you're looking at the Mag 7, we think that it's going to be, hard to really kind of, beat the estimates as far as, continue that kind of same trajectory of growth. We see that leveling off, and we definitely see some, potential volatility there. But, remember, there's 493 other names in the S&P 500 that haven't gone up as much. And so we feel that, certain sectors are going to, continue. There's a rotation right now that we see in small cap and value, and we do think that's going to continue.
I've got less than, about a minute or so left. Pointwealth Capital Management, how are you thinking about the traditional portfolio versus something that looks a little bit different than 60-40? We started our week talking about alternatives on this program, so let's end it. Are you looking for better opportunities beyond just stocks and bonds?
Absolutely. So we don't think the 60-40 portfolio is going to go anywhere. But let's face it, if you spread out your wings farther, you're going to have, that much more protection. So, hedging your bets with some liquid alternatives as well as some other alternatives like structured notes, for example. We are definitely overweight there. We are, hedging our bets, both with fixed income and with equities, using those alternatives.
All right. We'll talk to you soon. Sandra, thanks. Good weekend to you.